Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Let's get started on this video today for this Monday, March 19th, 2018. Notice the market's getting pounded today, although we are starting to rally off the lows of the day. I just closed out my second Facebook day trade for the day with the intraday stock chat. We've had 3 day trades today that we've closed out for profits. We're still in one that's moving into the money right now, so it's looking like another big day intraday. Now, swing trading wise, I've closed out 3 winning swing trades in the research center. Congrats to those members there. And in the options alerts, my business partner already closed out an OIH put play for a big gain, and I just closed out a Spiders puts that we bought last week. Think about that, folks. When we bought some Spiders puts when we were all the way up here. Look at the market here. We banked over 40% on those profits in just really a week's time, and it is just gangbusters. This year has been incredible. But bottom line is, what the heck's going on here with this market? The markets are getting a little freaked out because of Facebook and the news over the weekend about another kind of breach in security and just a mess right there. But to be honest, that's not even the underlying reason. That's Facebook specific. You're seeing the market selling off because honestly, the markets were held up last week because of Options X. They weren't allowed to fall. The institutions did not want to pay off those options. If you don't know that game that they're playing, you need to learn it. Remember, institutions sell 99% of the options to the public, and guess what? They're getting a premium for every one of those, and they maximize that premium as profit if it expires worthless. So there's an intuitive, there's a push by the institutions to make sure stocks expire or their options expire worthless. And so the stocks will actually be pushed around on options expiration Friday to close at specific numbers. You might notice on options expiration Friday, Apple may close at a weird even number. You might see Facebook closing at a weird even number. In fact, look at the closes on Friday of a bunch of these stocks, and you'll see that exact thing. Once options expiration is over, guess what? Market resumes its normal course. Its normal course, as I've been saying, has been in a downtrend ever since the Super Blue Blood Moon cycle in late January. We've seen this market head lower, and that's exactly where it's going to continue to head. There will be bounces along the way, thus me covering some shorts today or taking profits on ETFs that were short the market. But again, overall, you have a cycle that has now turned from up to down. And unless we take out the all-time highs on this market, that's the direction, and that's the way you have to go with it. All right, bottom line is, what the heck's going on today? Let's take a look at Facebook. Facebook getting crunched today. Nice bounce on it, as you can see. I mean, if you bought down here on Facebook, you made a lot of money today. But if we go to the daily chart, let's take a quick look at where this stock is going. Daily chart pierced the 200 moving average. You also got a lot of support here. I mean, look at all this support down here. Tons and tons of support right here. So this is the new bogey level. So basically the $170 level. Notice the low today, 170.06. Notice how 1, 2, 3, 4 hits of that approximate level or pierces of 170 have occurred. That tells you that as long as Facebook holds 170, it's okay to look for a bounce here. However, the second it breaks below, and maybe it's tomorrow, you don't know, if it does break below 170, there is no support until you get into the low 160s right down here. Okay? So be aware of that. And actually, I think it's going to go even lower than that. I think within 3 months, we see Facebook potentially down into the 150 range. Look at all this chop right here. That's telling you there's support there if we were to come into it. It's right around the 150 level. That's where it's going to be headed. There's little to no doubt in my mind that within 2 to 3 months, we'll be there, even sooner potentially. Okay? Remember last conference call by Facebook, they said that people were spending quite a bit less time on their platform. And again, somehow they spun it where, like, that's a positive. But let's be honest. Show me one business where you say to the public or you say to anyone looking to invest that people are using your product less, and that's a good thing. I don't think so, folks. I don't think so. Not even one bit. So Facebook, again, while you're going to have bounces, you have support at this 170 level, there is going to be further downside. I think 150 is a no-brainer within, again, 2 to 3 months, maybe less. Down the line, I think it's even less than that. I think it even goes less than that. And you're seeing huge, by the way, I mean, there's just a tech wreck today. I saw the NASDAQ was down almost 200 points at one point today. Just a nasty fall. Take a look at Alphabet, which is Google, down 35 and change today, 35 points and change. It was down over 40. Amazon, take a look at Amazon, down 30, and that's getting a little bit of a bounce here. And Netflix as well, down about 7.5, which actually is holding up a little bit better than the other ones percentage-wise, but still down pretty sharply. Kissed the 20 moving average here. Ultimately, by the way, Netflix is going to go much, much lower. First stop is going to be right here. This is going to be the big support line. Once it takes out the 20 MA, it's going to head right here, plus the 50 MA coming up, and that's my ultimate target short term. I am short Netflix, and I do expect, you may see a little 20 moving average daily bounce here, but overall it's going to go lower as well. Okay, so that's what we have going on here, folks. And again, even stocks like Micron are under pressure. What if you have been hot plays today or hot plays of late? Again, this is just what this is. Again, folks, I can't stress this enough. You're going to hear on the media tonight, CNBC, and you probably, if you're listening in at this point to CNBC today, you're hearing about, oh, it's Facebook, it's this breach, or what. I mean, come on. I mean, that's not why you're seeing all these stocks across all sectors sell off. It's because interest rates are moving up today, and the stocks were poised to make a move down in a downward cycle. And what you're not going to hear, I wish more people would talk about it, but you have Mercury retrograde coming in this week, and that's actually a huge, huge cycle factor as well. And again, a lot of people don't think about it. They don't think about cycles and how the different lunar and solar issues have impact and astrology and stuff like that. But it is humongous, folks. I can't stress that enough. The last thing I want to do, folks, is just show you this here. So here's our website, inthemoneystocks.com. And if you basically just scroll over here just a tiny bit, you can go right into the free market action, which is the blog where I post, these type of videos, informational stuff. But down here is the Research Center track record, and just take a look, folks. So this is the track record this year, and you can just see the stellar performance so far. We're not even, a quarter through the year. 200% profit, and that's if you were to buy every position and so forth. But let's just say you put 10% of your money in every position, so just divide by 10, and you're still up over 20% per year. The average person is flat to negative in the market this year, so it just shows you the outstanding results here. And you can see there are a couple losers out there, no doubt about it. I mean, here's a Procter & Gamble one, a couple others, Amazon, Netflix back here, but for the most part, look at the net gain. I mean, that's incredible right there. If you're into options alerts, by the way, Research Center is where you get these trades right here. There's a 7-day free trial. The options alerts right here. If you click on the options alerts because you're into options, here's the options track record, folks. You can see one expired worthless this year. Other than that, all winners. Net gain, even with that one expiring worthless, is still almost 700%. Incredible, folks. And again, if you're into options, then this is the place to be. It's just a no-brainer. And if you're into swing trading stocks, Research Center's there. Day trading, where I mentioned earlier, day trading winners right here. In 2 months, the net profit of the average profit in the Research Center is north of $50,000 for 2 months. So $25,000 a month. That's what the average person's making in there. Now, granted, we have a fair amount of pretty solid traders out there. So, I mean, they're not trading with $25,000. They're most of them, I would say, on average, are trading with $100K or more. But, I mean, it's the place to be. There's no doubt about it. Today, again, 3 more winners. The track record, I think in the last 2 months, out of 70 trades now, we have 3 losers or 2 losers, something like that. It's ridiculous, amazing. So bottom line is, come join us. This is where it's at, folks. Make money. Make money like a pro. Take care.